China is already a giant. This country is the largest trading power in the world. They lead the world with hundreds of products and have one of the largest foreign currency reserves in the entire planet. Not even the petro-monarchies in the Persian Gulf can compete with this giant country. And with all of this, it isn't surprising to find some analysts who state that China will surpass the United States as the leading economic power. But they're going to do that with a lot more inhabitants. However, we usually forget a very important thing, and this is that GDP, well, it's not everything. Economic power, the real power, is closely related to corporate power, and when it comes to that, China is still a long way from reaching the levels of the United States. If we look at the top 100 largest companies in the world, 56 of them are American and only 11 are Chinese. And this is something to really bear in mind because multinationals are in control of foreign investments and of 80% of the world's exports. Now the big question is, what's going to happen to these Chinese companies in the future? How are things changing, and what can we really expect? These are some of the questions that we're going to be answering in today's video.
The Chinese giant's development.
The Chinese economy has had an impressive growth rate in the last 3 decades, and key to this was the concept of them being the world's factory. This is what China is known for. They are known as a country that has become a world power and has lifted hundreds of thousands of people from poverty with a relatively simple premise: producing everything and producing it at a low cost. Toys, electronics, tools, clothing. When you enter a store, you are going to find hundreds of products with something in common, and that's that they are all manufactured in massive industrial areas located all over China. However, in order for a country to really be the leading economic power, these companies need to start producing much more complex products, and they will have to stop competing on cost and start looking for higher added value. This can include the production of things like capital assets, planes, medical devices, and computer processors.
That driverless car?
I have seen it all.
Intel's driving the future. Traffic lights, street lamps, business runs on the cloud. And the cloud runs on Intel.
And today, all these sectors are dominated by the large multinational companies of the United States, South Korea, Europe, and Japan. It is true that many leading products are manufactured in China, for example the iPhone, but this is not exactly true because what China are actually doing is more like the assembly. What this means is that the more complex parts, they're bought from other countries and then they are simply put together in China. To better illustrate this, consider this.
Each year, China imports more than $200 billion in semiconductors, which are essential in the manufacturing of mobile devices.
Just for a comparison, that is more money than what the entire country spends on petrol. However, Chinese companies have made many advances.
Today, a fourth of all exports are capital goods, such as machines, for example, or high-tech products.
In some sectors like telecommunications, wind turbines, or high-speed trains, Chinese companies are the world leaders. And it's not just that, because Chinese companies are also learning how to make it in the international market.
The Great Chinese Conquest.
2016 was the 40th anniversary of the end of the Cultural Revolution. This was a terrifying campaign which Mao organized in order to purify the revolution and finish off all remnants of capitalism in Chinese society. Well, since then, things have changed a lot. So much that China is only behind the United States in terms of numbers of multinational companies. Companies in this country, they're starting to make it into global markets, and, well, they're doing it really, really well.
In 2016, Chinese companies spent an incredible amount of money, $225 billion, in the purchase of foreign companies. In Europe and the United States alone, they acquired more than 450 companies.
These Chinese companies are buying all kinds of businesses: mining companies, banks, oil companies, pharmaceutical companies, agricultural companies, even luxury hotel chains, jewelry companies, and football clubs. Yep, you heard that right, dear viewer. The Chinese have even bought Inter Milan, and that is just one example.
Manchester City gets a $400 million Chinese investment deal.
But if there is one thing in particular that the Chinese love to invest in, well, that would be developing countries.
Even though Australia and the United States are the two countries that receive the most in Chinese investment dollars, more than half of all Chinese investment is made in emerging countries located in Asia, Africa, Latin America, and the Middle East.
So we could almost say that the more risky the country, the more willing the Chinese are to invest in it. Now, this might surprise you, but this is not the end of the story. Chinese companies are also starting to compete hard. Well, if there was only one Chinese company in the top 100 most valuable companies in 2006, there were 14 by the year 2015. And take a look at the smartphone industry. Up until recently, having a Chinese phone, well, it was a bit weird, right? Well, today, the four main Chinese manufacturers, Oppo, Huawei, Vivo, and Xiaomi, aren't just more famous than they were a few years ago, they also take more than 10% of the world's profits in this industry, and this is a figure that is growing more and more every single year. And if you want another example, well, you just have to look to Lenovo, which is a Chinese multinational company that was born just a few years ago, and indeed, it bought the laptop division of IBM and is now the largest computer company in the world, and they even supply equipment to the Pentagon. And how about even more examples? There's Haier, the biggest manufacturer of household appliances, or Kofco, a company that's acquiring land all over the world, like sugarcane plantations in Australia, French vineyards, or soy plantations in Brazil. And then there's Geely, a car company, which you might not have heard of, but it actually bought out Volvo in 2010. Yep, Volvo, that legendary Swedish car company, is now property of a Chinese company. But if there is a sector where China is really getting ahead, it is, against all the odds, the internet. And I say against all odds here because, as you probably know, China is subject to complete control of its internet by the Chinese government with something known as the Great Firewall. This blocks access to Facebook, Google, and The Economist, to name just three. However, on the other hand, in China it's pretty normal to do everything via apps. For example, when you visit China, you rarely pay with credit cards. The most common thing is to pay with a mobile phone using the app WeChat. This is something of a super app that is like an all-in-one Facebook, PayPal, Gmail, Twitter, etc.
By the way, WeChat is also owned by Tencent, one of the top 15 most valuable companies in the world, which is also the world's largest supplier of online games and one of the largest shareholders of Tesla.
So by now you are probably realizing that, oh yes, the Chinese, they are everywhere. As for another example of their success, do consider Alibaba, an e-commerce company that brings in $450 billion every year. And in China alone, this company has 400 million clients. And well, as Napoleon said, let China sleep, for when she wakes, she will shake the world. But before we all go and get scared, just have a think about what it means. It means more competition, it means better prices, better products, and faster technological development. As consumers, we can benefit a great deal from this transition. Now, obviously it does have plenty of risks too, or at least this is what US intelligence agencies are warning.
According to the House Permanent Select Committee on Intelligence's report, Chinese companies cannot be trusted to be free of foreign state influence and thus pose a security threat to the United States and to our systems.
And then there's the risk for companies which are going to have more and more competition, although they're also going to have more and more opportunities too, which we previously discussed in the video that we're linking to on the screen now. But let's not get too ahead of ourselves. Chinese companies are still far behind in technological terms, and they are in debt, and, well, a great deal of it.
Chinese corporate debt levels are too high, but it will take time to bring them down to more manageable levels.
And this is not the end of it. Don't forget that China is a dictatorship, and this means that the government has too much power when it comes to corporate decisions. Further, the government is pretty arbitrary and really unpredictable. For example, a few years ago, the government encouraged Chinese companies to try the international market, and they would loan them as much money as they needed to do so, but now they've decided they want to do the opposite. If a Chinese company wants to buy out a foreign company, they need the approval of the Chinese Communist Party, and there are new tough limitations limitations on money leaving the country. Further to that, we have to mention the censorship, the legal uncertainty, trade obstacles, and the bad reputation of Chinese products, and so on and so forth. So we can say that right now the United States' position as leader is not in particular danger unless something changes that is more dramatic than we are currently seeing. Long term though, well, who knows? So I really hope you enjoyed that video. Please do hit that like button if you did, and do not forget to subscribe if you haven't already. Brand new videos every Monday and every Thursday, and don't forget to check out the Reconsider Media podcast. They provided the vocals in this video that are not mine, and as always, I'll see you in the next one.